The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. Thank you to our host. Great programming, and let's hope we can just keep doing this all the way through today. Wednesday, we'll go through to 5 o'clock with Tom O'Brien. And don't forget tonight, I meant to put that up. Let me do it right now. Tonight, I will be the guest speaker at, can I find it? There it is. I'll be over at MIT, Massachusetts Institute of Technology, where they hold the Boston Investors Group meetings, and that's also the Investors Business Daily meetings. And tonight is a combined meeting. It's over at, let me just move this over right here. It's at MIT Tang Center, building E51. It's on the third floor, 335, I believe, is the room. Well, it's in the foyer initially. 6:30 to 7:30, we have the party. And then, of course, I will be giving the talk at about 7:30 on markets and where I think we're headed and what we're looking at. And what's really fascinating about this place, look, here's Memorial Drive. There's the Charles River. So it's just off Memorial Drive, and it's on Amherst Street. Number 2, Amherst Street it's actually the next corner away from Memorial Drive. So check, you can go to the front, you can Google Boston Investors Group and you'll see it advertised. And it's always free, but I think tonight they're going to have some kind of a little bit of a fundraising, maybe small donations, whatever you can, because Jeff, who really runs it, he pretty much pays, I think he's paid like $240 so far this year. So it's really just to cover those expenses. So if anyone's there and they do wish to give it all, that's great. If you want to take some food with, that's also fantastic. Even knives and forks and cups and plates, because it's always a great party. So looking forward to seeing you there tonight, right here in Cambridge, Massachusetts, and over at MIT. And it's not in the labyrinth of MIT where you need an MIT degree to actually find your way through the corridors. This is a very easy place to get to. Okay, and there should be plenty of parking because it's, I think it's winter break. Now let's just go through this. E-minis down 550 at 2255. Now you see here's the 120-minute chart. Look at this. This is amazing how often I talk about this. Sideways consolidations can take a long time. Look at this. We've been in since about mid-December. We've basically been in a range of call it 2270. This is a continuous contract which shows that at this point it's at exactly the same measurement as the March contract, and 251 is the base. And here we are right in the middle of it, just zigging and zagging within a very narrow trading range. Let's get out of this and let me show you a couple of other things here. Within the context of the markets, yes, we talk about 20,000, but 20,000, besides the fact that we like to say it's just a number, it's really not that. Basically what it is if you look at a trend line, it happens to coincide that it's 20,000. That's the resistance right now, 19,990s. But look at this. If you use the Chapman wave inside track repellent resistance zone, that red trend line, which I drew the other day, shows you that this is the third week that we're bumping to resistance right on the line. Now, what is really important is that the stochastic's at 96%. It doesn't get much better than this. This is really good, and it's flattening out. And that says to me that any decline would probably be a buying opportunity. We were long from mid-November. We got out mid-December, and we're looking to get back in on the long side. At this particular point, we do have a short position on a volatility along the volatility index, but we'll see what happens. I'm thinking that there's some resistance here that maybe we match a little bit what happened last year, and we get an early January pullback, I don't think it's going to be as serious at this particular point. There are just too many people that have missed this move completely. And I'm suspecting that as a result, there will be buyers. So now, my contention always is that the volatility index, which is trading at 1243 right now, 44 cents, needs to get into the 14 to 15 area, and then you will see selling pressure be maintained. Until that happens, these are just sporadic pullbacks. That's number one. Number two is, as far as I can see, my contention has always been that the markets do not pull back very sharply and sustain a move to the downside unless there is bad news, and that bad news must be accompanied by a higher volatility index. To me, that covers selling pressure. Once you get that high VIX, that's just telling you, hey, there is selling pressure going on. Now, a couple of things that are going on as well. Let me run the numbers. So the Dow is down 15, no big deal, at 19,929. What is a big deal, we've spent almost the entire 2-3 weeks here pounding up against the 19,900s and not breaking into the 20,000. So that says to me that this trend line, not 20,000, but this trend line is acting as very strong resistance. It's also suggesting that there might be a pop to the upside at some point fairly soon, but in fact we will come back and do some more testing. But I'm making it real clear. A Dow that trades at 20,150, nope. A Dow that closes at 20,150 or higher has broken out, and we might see an acceleration right now. We might not even get the pullback. So that means it turns out that from our opening call subscribers in my Traders Corner, we don't have all that many positions. We're trying to hold some of our long positions, and within the short category, we don't at this point have much in the way of shorts, but I am looking at increasing those shorts, and I'll show you. Look, every day I've been focusing on Teledyne, a monster in the area of the industrial conglomerate, made a peak F top, and really it's pulled back quite sharply from the 129, was it? 129.36 high of the 8th of December, going down to 122, 7 points. Big deal. But it is a big deal because this is where we're going to get a real test on this type of conglomerate. Is it able to break out and get to the 130s in January, or is it going to rather take its time, pull back under 120 and have a decent consolidation? And there's that uptrend resistance line that is now really the support line right about 121, 120. If you look at Berkshire Hathaway, BRK, I need to do the numbers before I do this. Berkshire Hathaway, same thing, made a peak D, and now it's just kind of stalled sideways, but it hasn't broken down. So there are Goldman Sachs, there are a number of stocks like this, just holding up here at the highs, not really breaking out from this level, taking a week or two or three to consolidate. Let's just run this now. We're going to go SPX.X. The S&P is at 2261, down 760, made a peak E about 3.5 weeks ago. It's just kind of stuck there in the trading range. The QQQ series had a great day yesterday, giving it back today at 120.48.34. IWM made a peak C1, C2. This is what I'm calling a double top peak C1, C2. Pulling back today, it's at 135.83. We'll go on when we get back. We'll talk about gold, we'll talk about bonds, we'll talk about crude oil. Be right back. Dow's down 14, Basil Chapman, Tiger Technicians Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So we're looking at the IWM. What I'd said was that the Russell 2000 iShares trading at on the 9th of December at 138.82 made a peak C. When it pulled back, and I was waiting for that leg D, but then when I did more intensive work here, I saw that the moving average convergence divergence, the MACD, did not, in fact, hold up as well in that pullback. The stochastic was making lower lows and lower highs. Only the on-balance volume needed one more pop, which it gave when it went to peak, and I call this C, this leg, at 138.21, underneath the high of 138.82, peak C2. It isn't ideal. I usually like it to be so close that it's very obvious that you can call it a miss in making that leg, missing leg D. So, but everything about the technical said, no. The IWM is really struggling here. This has to be a P. It could still make a D, but I want you to feel comfortable saying that we exited our position and that's it. Our long position that we got somewhere about December the 5th or 6th, and then we got out. And now we're just holding tight, waiting to be able to rebuy the IWM, but not just yet. So when you get to this situation and you're looking at the other indices and you're going to say the New York Stock Exchange, that made a peak F/B. I have to wait until there's a decent close below the 9-period exponential moving average, plus the H pattern, the lowercase h pattern, because the MACDs and stochastic they look very poor. So this is going to be a peak F with a down arrow at the end of the day. If it closes underneath 11,000, it's at 11,108. If it closes under 11,120, I'm going to put a down arrow. And that makes me still consider what the peak is, the label in the weekly chart. To be pretty strict, I should call it a D/A. And I've got it as an A, but I'm gonna do that because that really is what it looks like, a D/A. And then the monthly chart has gone to a leg C, but it hasn't closed. Remember, we were talking about this the other day. It needs to close decisively above 11,254. Then I can say, aha, a blue peak C, or leg C in that case. And that'll change from being a gray. Gray means it's underneath the previous high. All right. So yeah, we just go on. I said I'd go to the gold. Now I'm a little embarrassed. I'm not a little embarrassed. I'm very embarrassed. We had a stock yesterday that I wanted to buy. And I put it in, and it was trading way higher. And it was a gold stock. And occasionally we'll grab this one because it's given us really nice gains and very small losses when we don't get it right. And what happened was gold looked to me as if it was trying for a leg B to the upside, which said that it could start an H pattern. Not a big deal, but big enough to allow the GDX and the gold stocks to have a nice bounce here. And I thought that because of the only reason why I did this morning, I'm going to explain everything to you in a moment, was because when I looked at the dollar is having a very strong session. Normally, I would anticipate the counterpoint move in gold, but gold is actually starting to try to find a base here, and that's what I've been talking about for the last few days. So I still wanted to be a little bit careful. So I sent to my subscribers, because we've got this ongoing course, a three series course, a webinar. And yesterday, we wanted to buy under $4.03, and it was actually trading at about $4.12 or something like that when I sent out my Traders Corner, and I sent out the chart as well. And I said, we want to buy NG, which is Nova Gold, under $4.03. Well, yesterday's low was $4.02. We were the low. We got that low beautifully. And what did it do? It closed. It hit then went to 422, and it closed at 417. Very nice. I love the action. I sent this out this morning, and this is exactly what we spent time on during my webinar over the last Tuesday night. And what I said was, within the context of what we're looking at, we want to see the naked chart. We want to be able to draw some trend lines. Then we want to use the stochastic, and I gave the reasons, the rules, and everything that we look for in the stochastic. Then we want price movement as well. Then you want the moving average convergence divergence, the MACD, to be able to, yesterday it was down there, and we wanted it to cross positive. We wanted to see the histogram start improving, but there had to be price movement with it. And then I showed the whole composite, everything together. I even added the 9-period exponential moving average and a 7-period smooth moving average. And what I said was, we want to add to this position. We want to add to it, and what exactly did I say? I said, we want to add to it at $4.12. It was trading actually at about $4.19, $4.20 or something like that. We want to add to it at $4.12. I wasn't even sure we'd get it. And then I said, whoa, if the dollar is very strong, we might find that there's a little bit of a pullback today. So I said, we will we'll want to buy a second position at $4.12, but we will have a $4.08 stop. And then I added, because my thinking was, if it actually gets to $4.08, I don't want to give up the nice entry that we got at $4.02. And I said, let's make it 408 on the whole thing. So what happens is we get it perfectly, we add to the position, and then what is the low on the day? $4.08, and we're out of it. We made a little bit of money. Oh, and here it is trading at $4.25. What can I say? This is what happens. Maybe I was a little too cautious. I love the action in gold just as a very quiet maneuver in the background, but I love the action in the GDX a little bit more. And that said to me, these gold stocks should do nicely. And look at the GDX doing a stochastic move nicely. MACD is moving nicely. Together they're moving quite nicely. Got your price movement, even have an island reversal right there. Well, actually, I don't take much stock in the island reversals in instruments that trade overseas, because you almost always get that. But it is interesting. So now I'm going to have to rethink this. How do we get back in? Hey, that happens. I mean, I did everything. I did the analysis. Got just a tad too cautious because I based it on the strength in the dollar. Now, a couple of questions I've got. Basil, have you ever looked at OSTK? Oh, no, I haven't finished. I'm sorry. That was gold, and that was the dollar. I want you to just look at crude oil. And I think that crude oil, there are bidders in crude oil, and there's a Chapman wave inside buy mode, and this is a gray leg B right now. There's your gray A, and there's your gray B. What does gray mean? It means it's a retracement failure mode. It's not decrying the move. It's not putting it down. It is just an explanation that there was a major top right there to peak E just recently in the 55s, and it pulls back to the 51s, and now it's retracing in a rectangle or a cup formation, and I'm explaining what it is. It's a retracement mode, but that can fail. That's why there's no guarantee it's going to go to a C and a D. That's really what it says. So it's a failure mode, but it can go to new recovery highs. And the weekly chart says it's at a peak C. This could go to leg D. So crude oil is looking quite good, and that is giving some strength to the market. That's why I didn't want to get overly short or anything like that. So what I'm looking at here is crude oil, and the only thing missing is is copper. And copper right now is it's kind of weakish, but it's in a trading band. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, now I can go to some of the questions in the den and also the email. So Jan the Den wants to know, MUX, what is it? Oh, McEwen Mining, trading at $2.88, up 3 cents. What was the question? Oh, MUX, please. Oh, well, that was a question. That's a good question. Yes, trading at 287. I'm going to recommend, based on what I'm looking at, you really can't go I am going to put an up arrow in the monthly, but it's the arch, the cup formation that I'm really looking at in the monthly chart. So let me just say that there are a couple of things happening here. That when, in my work, based on troughs coming down, especially weekly charts, once you've formed all these A and B minuses, and now you're at a trough D, that's where you can expect the largest arch, the third one, maybe it's the fourth one, and that's where you can expect something else to happen, or even an M-shaped pattern. But I like it. And the monthly chart is not what I'm looking at. I'm looking at the daily and the weekly. It's really the weekly that's given me a little bit more information. And what it's saying at $2.88, if in 3 days' time, it's a weekly chart, doesn't matter, that'll take you into, today's Wednesday, says Wednesday, Thursday and Friday, and then we start off the new year next week. So yeah, by early next week, if it's trading at $3.10 or higher, I would say to you that this could be one of the nicer moves in MUX in the shorter term. I'm still treating it as a bounce. So yes, the answer is right here, 288 MUX. I would start a position, treat it as a starter position, wouldn't get too carried away, but most importantly, when I'm looking at this, I need to see that it trades a little bit more at the 290 area. Why? Because I want you to go more than halfway into the wick of the candles, inverted Roman candle yesterday. So that says at about 290. The moment it trades there, even if it's just for a couple of hours, it has to hold there. That says there's a really good chance it's going to test the high, the tail, and that is at 294. And if it breaks above that, then 301 is the 200-period exponential moving average, and I think it's going to try for that. Well, I hope that helps you. So, whoa, that was the end, not the end of the story. I would, in this particular instance, because of the dollar's action, and I do think that dollar's getting a little bit toppy here, I'm going to make the recommendation that you have to have a wide stop just for this move right now. So the stop would be 270, that's 18 cents. But the moment it breaks, if it can break above 294, goes to 295, I would raise that stop to about 282 on just a little bit of on half that position, just to have a little cushion, because if this does break down and gold does turn down very sharply and gold and the dollar moves higher, then if this goes under 278, I think it's going to go quite a bit lower. I don't believe it's going to do that. I'm just saying that would be my expectation. Number one. And number two is, where would I add to it? Just start your position now, and I would add to it after it makes, if it makes a peak B today and then a C to leg C tomorrow, then I would start another position, a separate position, and that would probably be somewhere in the 280, about where it is now, 288. That's if it goes to a new high, a new recovery high, that is. All right. Now, what was the question? Is that a falling axe in max? Oh, yeah, good point. Now, let me talk about this kind of pattern here. This is for me, in my work, over the years, I've noticed I used to see this on the upside years ago. And when I'm talking about years ago, I'm talking about back when Merck was on fire and Pfizer, years and decades. And I used to notice that they climbed. It was a worm pattern. I called it the worm pattern because I didn't use the 9-period moving average at that time. But it just kept climbing in like a channel. It's like a tiny, narrow channel. It kept going higher and higher and higher. Then when it gave back, at some point, it would give back like 3 weeks worth of upside and then start climbing back again. And then I noticed on the downside that the small, narrow channel has almost the same effect. And MUX, McEwen mining would start to break out if it went to 320 on a weekly basis and closed there. That would say, hey, now you can draw another inside track resistance line, and that resistance line will be green right there. And where would it come out? Well, it depends when, of course, but it could come out to $3.35. Those are the projections if everything works out. Let's just go one step at a time. The day is very young. All right, so we got that. The next question was, where are we? Wait, wasn't there was that stock that overstock, OVST, OSTK, I think it is. I think there was a question that I have not looked at overstock for I don't know how long. OSTK, come on. Thank you. Now, this is a little different. In the weekly chart, it's gone peak A, B, C. Double check that the low. That was the low. That was the low. And then it went D and E. I think it's in a trading range. Would I buy it now? No. Would I short it? No. I'd be more inclined to short it, but I need a little more evidence that it's weakening, and that's not there in the weekly chart. So I would just leave it right now. Overstock OSTK trading at $17.63. To tell you the truth, I just have to step aside. If it breaks above 18, it's at $17.70. If it goes above 18.07 closes above that for more than 2 sessions, I'd be inclined to think it's going to go to a higher price so that it could try to tackle that candle of the 20th of December up in the 19s. But right now, I'm nothing. I'm not going to do anything. Can't help you. Sorry. Okay. Next question I had was GT asked about BAC. Well, I'm looking at the banks, and I have to make some kind of decision here. This kind of pattern where you come down and you make a potential H that can go to a cup formation is a potent pattern. But the MACD and stochastic are very weak. BAC trading at 22.54, down 7 cents, Bank of America. I also haven't had a chance even to show my subscribers to go back to the Chapman Wave stalk leg formation that succeeded. And when a stalk formation completes its beak, which this did at 10.99, it's a powerful upside pattern, but all it says, it's very powerful and it'll rally sharply, but then you're on your own. Then you have to look at completely different techniques. Leg, body, neck, tiny little head goes to 1848, just above the old high of the oval pattern December of last year of 18.21, 27 cents high, but that was the head. Pulls back, breaks through the body support, goes under it, and now starts a brand new move. Leg C in the monthly chart. Question is, the exact wording is, what do you see for 2007? I see higher prices, but I see some kind of a digestive phase ongoing right now. So XLF, BKX, XLF is the ETF. The BKX is the index that is based on, and Bank of America in particular. Goldman Sachs is probably the leader, all in a consolidation phase right now. I'd love, as I said to subscribers this morning, a 5 to 8% pullback to start building a position for the first quarter of 2017. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Whoa, a lot of questions. Let me try to deal with this one at a time. So, question here was, Bank of America, etc. I think that they are really close to some kind of a pullback. KRE, the question that then was, Basil, isn't KRE a better buy than the XLF, leg B monthly in CRE versus leg C in the XLF? Yes, I do believe the SPDR S&P Regional Bank Index has been absolutely on fire. It looks spectacular. I was wondering what I would call this if it went to a new high this week. And I have to say, A, B, C, D, A, B, C. Probably it's just a leg C, G/C. So I'm calling it G/C in the weekly chart, really strong. And the daily is getting a little toppy, but the MACD pulled back, the price went higher. That's a divergence of significance. So I'm respecting price as the arbiter of a trend. And right now the trend says, looking good at this particular time, but getting a little bit toppy. That doesn't mean to say it's a short. It means that you want to see where you can buy it again if you want, unless you're able to split your philosophy into 2 sections. Say, hey, short term, I don't care, it's going down. Longer term, it's going up. I'll try to short and then try to go long. At this point, I'm stepping aside. I'm watching it closely. So that's KRE. And this brings me to the next question. Freeman wants to know, it's a very good question. Actually, I've got 2 questions almost the same. So let me go to Freeman's here, right here. Basil, good morning. Remember, President Obama never talked about the market, yet he had one of the best market performances. President-elect Trump already is taking credit. Do you think we will see a bear market during President Trump's tenure? I'll be listening to the show. Thanks, Freeman. So, Freeman, am I taking calls? I absolutely am taking calls. I forgot to look down because I had so many questions going on. Freeman, I'm going to answer that in a second. Let me go to Rich in Orlando. I hope I hope it wasn't too late for Rich. Rich, are you there? I'm sorry, Rich. Maybe Rich will call back. That can't be XLS. That's XLF, I'm sure. So, Rich, if you can call back or just send a message or something, I didn't realize that you were waiting all that time. I apologize. I usually try to get you very much sooner. If you do have to do something else, listen to the archives. If you're looking at the XLF, it's made an oval pattern. And now it's gone sideways. It kind of negates that pattern to a certain extent. The way I'm looking at it is in a trading band. I would not be surprised if the XLF by next week is starting to pull back and it tests at 23.58 right now, 23.59. Then it starts to test this candle right here, the candle of the 19th with a high of 23.43 and a low of 23.18. Rich, I hope you're able to listen to that because Al wrote XLS, but I'm pretty sure that that should have been an F. And that's really what I was talking about. during the break that you were just listening, and I should have been answering. My apologies. I promised myself that'll be my New Year's resolution. Keep looking down at your producers' questions here. And are you taking calls today? Yes, I am, but I forgot to look down. I'm sorry. So now let's do this. So Freeman, this is what I'm looking at. I believe that there's going to be a sharp decline under Trump. And that's where everyone's going to be talking about how things are not working, blah, 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 blah. But if I'm looking at my monthly charts, the S&P is in leg C at 2262. The 9-period moving average in the monthly chart is at 2156. That's 1,000, 11 to 1,200 points of Dow. That's and 100 points or 110 points in the S&P from here. There's an up channel that says there should be support between 2150 and 2134. That takes you underneath that particular 9-period moving average. So what I'm looking at here is the move that we've just seen was so quick that there should be some kind of a pullback. When the pullback looks like it's going to get really serious, that's when I think buyers step in. Just too many people were short, have been covering. Some people, I wouldn't be surprised, if they're still short, they're still waiting for the big move down. And there are just way too many people that aren't long. I think there's tremendous support in the market right now. Yep, 1,000 points, 1,500 points in the Dow. You can get that at any stage. Now, I think it's later that we've got to become, if the market starts its accelerated move, if we start to get the 2,000 kind of action, but this time in the Dow stocks instead of some other peripheral area like biotechs, which I think are kind of done, or say the semis become the leaders, that's okay. But you don't want any of the old guys to be there unless they're the very old ones that were there for 2000 that have come back sharply. So that's the whole thing that I'm trying to put together here. Timing, I've got between March and May as really difficult areas for the market if there's a left side, right side price time match. But at the same time, it's any corrections that we have in between. Are they going to be of the 5 to 8% variety, or are they going to be the double-digit variety? And that I can't say right now, because I do believe so many people have missed out and that are wanting to get in. They're not wanting to short right now. There are a lot of people that actually want to be buying, and that gives you support. All right, next question. So, Freeman, I'll answer it as time moves on, but the answer is, will there be a major crash under Trump? And my suspicion is that at some point, we're going to either get so overbought that it's inevitable that we have a major, major correction, or else we're going to have corrections that are of the 5 to even 11 or 12% variety like we've had, and then the market just comes roaring back again. So I can't answer it exactly right now, but believe me, I'm working on that. I'm starting to get a lot of clues, but I haven't got the answer yet. Let's see what happens in January. That's going to be very important. Then Bob wants to know about Triple M. Yeah, Triple M is consolidating. It hasn't gone to its leg D. It's going sideways. It's a high-level consolidation. GE, which we are still long at 31.88. Just having a big consolidation. Looks like a peak F top there. The weekly chart is good. Monthly chart is good. What was it? UTX, my Dow Quartet, UTX. That's struggling a bit, but it's still a high-level consolidation. There's nothing here that's negative. Why? What am I missing? IBM. IBM is, in fact, also, they're all doing exactly the same thing. A big rectangle formation that's using up time rather than price at this stage. When we are finished with all the tax selling or whatever it is, we get that first week of January. The question is, will we copy last year's first week of January? I don't think it'll be as serious a decline if we do, but I think that's a possibility. We have a pretty quick and sharp decline for the first week or two of January. That's my thinking. We'll see how we deal with that. Next question Julie wants to know is crude oil near a top, up for 8 consecutive days, biggest winning streak of January 10, which had consecutive up days near a top rally ahead, or rally ahead of January OPEC oil withdrawal. Yeah, you remember, I heard that, and on the radio this morning going to the gym, I heard about let me talk about oil. I don't want to just rush through it as we're going through it, Ray. I'll talk about oil in the sense that it has been support for the market. What will happen if it starts to pull back? We'll talk about that when I get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Let me just go back to the crude oil, and then I want to talk about bonds. What's the time? Yeah, we've got time. So crude oil looks to me like it's got this rectangle formation, and it's going to try to go higher. Technically, with the way the MACD and stochastic is, I wouldn't be surprised if in the next week or so, if it's at 54.21, it does try to get to 55.59 for leg D in the weekly chart. Then we've got to be real careful, and that would apply to the monthly chart as well as the daily. But in the meantime, so far, I think it's holding very nicely within this moving slightly higher highs, slightly higher lows pattern. So I will deal with that very soon, and I think that's in January. Yeah, we'll talk about that, but at this point, I think it can go a little higher. That's number one. Number two is we're looking at the TLT. Since we're looking at the areas that have been weakest, are they able to rally? Well, look at the MACD in the iShares of the 20-year Treasury bond ETF. MACD, if I was just looking at the MACD and you said to me that on the 1st of December, the TLT was at 117. Where is it now? I always say, oh, 122 for sure, 123 maybe. No, it's at 118.09. It's used up all that energy, but it hasn't even, it's making lower highs and in certain cases lower lows. So the stochastic's flat at 33%. Now it's the weekly chart. That stochastic at 3.56 says, yeah, this is not great. It could just continue flattening out. It has to make a V-shaped recovery to really get the price going. So I'm watching this real closely, and I'm not 100% convinced, but I'm really close to 85% convinced that we are going to pull back before we start trading. I don't mean hitting, I mean trading in the 20,000s. And that's really the way I'm looking at it. It might be wrong, but that's kind of the way everything. It's had an opportunity to just slice you 20,000, couldn't do it. That means it's going to take a little bit more time. So I hope I'm answering the questions about some of the things that were asked here. So tonight, let me just do this one more time. At MIT, at the Tang Center, building E51, I'll be giving a talk. It's I'm the guest speaker. And there'll be a party beforehand because it's the annual party. I think this is the 10th year anniversary. So let me tell you that this is always just a fun event. People ask questions just out of the blue. I'll get a question that I hadn't even thought of before on the spot. I have to start looking at it, and I'll pull up charts. I'm going to show charts of the transportation index compared with the Dow. Just a whole bunch of things that I think are really important at this particular time. So within the context of asking questions, listening to people who, a number of them are really fundamental. They are technical traders because it's part of our Investors Business Daily as well. But I get questions and I have people that actually answer the questions for me from the audience. That's the expertise. People like to ask the question that they're really kind of familiar with the answer. So that's always very interesting. I love it. It's really a very nice opportunity just to meet people with, market-wise and have good questions, etc., and have a good time. And really, you can continue relationships with people that you meet there because these are people who are serious about the market. So I'm looking forward to seeing some of you tonight. Starts at 6:30. The talk will be about, I think, at 7:30. Third floor, it's room 335, building E51, 2 Amherst Street, Cambridge, Mass. So let's hope to see you. Now, stay tuned for your shows coming up, great shows. And I'm watching the volatility index. We are along the volatility index. We have a position there. It's trading at 1236. If it starts to trade in the 1268 or higher area later today because the market's starting to pull back, we might start the consolidation a little earlier. I'd said to subscribers Thursday, Friday, where we want to start our positions, and that's going to be really important. If the Dow comes back strongly and closes up 20 points, S&P comes back and closes down only 4. That'll be good, but then the VIX index has to really go back to the 11s. I've got a feeling we're in for a little bit of a consolidation coming up here. Hey, folks, have a great day. I'll see you tomorrow, and hope to see some of you tonight. Come up and say hi and tell me who you are. I'd love to see you. Thanks for being here. Have a great rest of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.